Hey everybody, welcome to Mortgage Today for Tuesday, August 29th, 2023, and oh, what a day it was. MBS were down 13 basis points in the first hour of trading. Stocks were pretty much flat. Bonds were initially stronger in the overnight session, but the gains were limited to Asia-only trading hours. Once Europe came online, the trend reversed, and we've been losing ground all morning until we got those JOLTS numbers. As for justification to the overnight, it was nothing too terribly compelling and mostly offsetting news. We got the Case-Shiller Home Price Index, which came in month over month up 0.9% on a 0.6 forecast. It was 1.5 previously. Year over year came in at negative 1.2 on a negative 1.3 forecast. That was negative 1.7 previously. FHA Home Price Index came in at up 0.3 on a 0.7 previous, and the year over year came in up 3.1% on a 2.8% previous. Then we got the job openings, the JOLTS, Job Opening and Labor Turnover Survey. Job openings fell pretty dramatically in July, according to JOLTS report. Job openings fell by 338,000 to a seasonally adjusted level of 8.8 million. On a year-over-year basis, openings are down 2.5 million. Job openings fell in professional and business services, healthcare, and social services and government. The quits rate edged down to 2.3%. And quits fell by 250,000. The Fed pays close attention to the JOLTS number, and this is a big sign that the Fed's tightening regime is finally gaining some traction in the labor market. While job growth remains strong overall, the labor market is softening as evidence. Continuing claims for unemployment are steadily rising. At the beginning of the year, they were 200,000 below the weekly average of the years 2018, 2019, and 2022. They then steadily weakened such that by the end of 2023 quarter one, they matched the 3-year average above. But by the end of quarter two of 2023, they were 200,000 above the average. Markets are now firmly pricing in another Fed rate hike to come in November, and it is unlikely we see rate sheets improve much from here. No one had much to say or think about the JOLTS over the past few decades, but has risen into an increasingly prominent market mover role in 2023. Today was the latest example, as a big miss resulted in a big win for the bond market. Taken together with last Wednesday's PMI-driven gains, 10-year yields are a full 25 basis points off of last week's highs. That's the kind of reversal that makes people start thinking about long-term tops. So was that at the top? The answer depends on the extent to which you can accept the Fed's data dependence thesis. And if so, it depends on even more on how much upcoming data actually comes out. MBS ended the day up 47 basis points. Stocks pretty much flat, up 6 points. MBS are at least flirting with the still awful ceiling at 99.76. So ending the day at 98.68. We are now just above that 25-day moving average, which has been dropping precipitously. And it's flirting, like I said, with that ceiling at 99.716. We did get a post from our sponsor at wellthatmakesense.com about influence objective. To effectively execute and tie down your influence objective, the behavior you wish to influence must be clear. So it's all about making your influence objective clear in your own mind so that you can influence other people to work with you. So check it out at our sponsor at www.wellthatmakesense.com.